Abror, do you have access to X? Hey, and are we live? Okay, we need to get the Discord out. I saw Abror typing, but it didn't go out. I'll sort.
Let me open the YouTube just in case.
Okay, I believe we're ready to rock and roll. John, is that correct? Are we live everywhere? Okay. Tom, Abror, how's it going? Obviously today, huge news the last couple of days with Iran and the US. Markets are fascinating right now. Tom, you just put out a market update. How about you dive into that and give us your overarching take on what's happening right now?
So essentially, the focus was on the war in the Middle East. Um, Not so much on the missile strikes, even though that is what's going on, obviously, but more the focus, I think, for markets will be on the Strait of Hormuz, the potential closing of it. Not that they can actually close it, but what they can do is they can threaten ships passing through, drone attacks, etc., on these ships that basically stops the flow of oil, and 20% of the world's oil flows through the strait each day. Now, the Saudis can make up for that by sort of moving their oil out through the Red Sea rather than going through the Strait of Hormuz. But the issue is going to be for markets, the inflation issue. So should this war last longer? And currently, the forward-looking oil curve is saying that this isn't going to go beyond a few months. But should it start to should this start to ramp up and look like it is going to be something that is longer lasting, a couple of months, that I think that's what is the risk to equity markets, risk assets, etc., which is higher inflation, essentially because the oil price has gone up. That high inflation means the Fed then essentially can't go and cut rates because they've got to wait to. The Fed could look through it and say, "Oh, we think this is transitory," because it could be argued it is transitory because it's just the price of oil being pushed higher, but that can seep through into other things. So really, that they probably won't declare that. They shouldn't declare that, and they should just wait where they are. One of the Fed speakers came out today and said that they still believe they're moderately restrictive. But if inflation is moving into 3%, which with a oil price spike, say it gets to the $90 area, somewhere in there, anywhere between 85 and 100 is going to put it in the 3%. That would mean the Fed remains on pause, and that's just going to continue. You're going to see interest rate cuts could be priced out further and further and further, and that just isn't supportive for risk assets. So I think overall that's the top-down message in the update.
Okay. Well, with how terrible that sounds from a macro perspective, why is the market doing so well?
Again, because I think the forward-looking curve for the price of oil isn't pricing this as being a long-lasting conflict, and long-lasting doesn't necessarily mean it's going to be 2 years, but they're pricing that this is going to be a couple of weeks, and then we're going to be moving on. So I think that's why equities, risk assets are sort of shaking it off this moment and still paying close attention to it. And you're seeing small price jolts higher or lower based on new news that's coming out. But again, it's hard to know which news is confirmed and isn't confirmed. So the markets are paying close attention to it. I just don't think they're positioning that much based off of it at this moment in time. Should you start to see the conflicts be priced for longevity for several months at least, that's when I think risk assets will like not puke out, but will sell off quite considerably. And I think that's what probably can take Bitcoin back to the bottom of its range at low 60Ks.
Okay, no, that makes sense. That makes sense. Talk to us about rate cuts, the probabilities of when we saw them happening percentage-wise and where they're at right now.
A month ago they were for June. Now they're looking like July is 51% not going to happen in July, or 51% chance that they're going to hold in July. So July is still a bit of a coin flip, but the way the odds are moving, the direction in which the odds are moving is for the next cut to come in September rather than what was a month or so ago, June, then July. Now July is a coin flip essentially. So the odds for cuts are just getting pushed out further and further for now. And this wouldn't have been the case if this conflict in the Middle East didn't happen, but it has happened, and the markets do just have to react off of it.
Okay, that makes sense. And so, in layman's terms, and you can correct me if I'm wrong, it's as simple as look, with the conflict kicking off and the Strait of Hormuz not being closed completely, but basically, closing down to an extent, oil price has gone up. That means inflation will increase in the US, which goes against everything Trump has been looking to do for the last several months. And if prices of oil stay elevated, inflation comes in hot and basically pushes rate cuts away and potentially even brings rate hikes onto the table, which is just an absolute terrible
No.
headwind for the markets. No?
Yeah. Yeah. So that would be very far from ideal. I think I'd be very surprised if that happened, because I think Trump would be pushing Walsh, and I think he is maybe a bit political now because like Trump has picked him and stuff, and I think he will expect early on in the tenure to go and do cuts. But um, I think I think the Fed, Walsh would have a hard argument or hard job to argue for this oil price spike is transitory and trying to convince other members on the board to then go ahead with cuts. If the rate was higher at 5%, you could say we're still extremely restrictive. For now, let's view it as transitory, start bringing the rate down slowly. But when the rate is at 3.5, 3.75%, and the sort of estimates are for neutral to be at 3%, you then say to yourself, are we, is there that actual, so you're modestly restrictive at this moment in time. Is there that room to go and cut into that, particularly if you see an inflation spike happening, whether or not it's transitory or not? How confident are you that it is transitory to go and then make that call to then cut into an environment which is just modestly restrictive? And the labor market is not screaming out for cuts at this moment in time. So it's just a bad move, all in all. So yeah.
Okay, that makes sense. And this really all hinges on the price of oil and what's happening with the Strait.
Yeah, essentially, the again, the missiles back and forth are not. I wouldn't say they're a problem for people in the UK or people in the US. Um, it's more targeting the economies in the area, knocking out the water supplies in the UAE, etc. That's where I think the war is the effects of the war will happen. It's not so much affecting the people that are further away in other countries, but it's markets will be looking at the thing that affects them the most is the price of oil, and they're mostly going to be fixed on that, not really much else. Obviously, they'll be looking for signs of escalation or de-escalation that could then, but essentially it's saying if there's an escalation, that's the price of oil going higher because the Iranians will try to retaliate by closing the strait. However, it does depend how much pressure the Chinese put on the Iranians to keep the strait open, or to at least let Chinese vessels pass through. Um, Today, I'm getting a bit lost on the timings, to be completely honest. But whether it was yesterday or today, I know the Chinese have halted um, exporting energy and oil out, and they're keeping it all internally for now. I don't even know if that was this morning or it's all sort of muddled into one, but
Mm,
that was recent news as well. So I think energy is the main thing. Oil energy is the main thing that's going to really move markets at the moment. I'd say the one key takeaway is at the moment the markets are suggesting or viewing this as this is not a 3, 4, 5, 6 month war. Even though Politico have just come out and said this could last until September, they're viewing it as this is something that is several weeks, and therefore they're not pricing in, massive inflation to come in 3, 4 months time. So they're sort of just pricing it. This is a risk for now, but it's not anything major that's going to really upset markets, and that's why I think you've seen risk assets hold in for now.
I see. I see. We also saw Trump say, I believe earlier today, that he was going to assist in safe passage for the boats to continue going through the strait. How much of this is just talk versus the actual practicality? Because from my understanding, it doesn't take much to sink a ship.
No, I think he wants to guarantee. I think he wants to guarantee it, but I don't think it's at the end of the day. It's up to the ship to say, "Sweet, we'll make the journey and pass through." But if they're not sure that guarantee actually lies there, or a can a I think a warship would be able to stop a couple of small drones coming, but at the end of the day, it doesn't take a lot. The Iranians just need to go and attack a few vessels to stop all the other vessels passing through, and really the use of then 10 to 20 drones has closed the strait. So even though there is that Trump giving every green light for the ships to continue, most of them are not going to go and take that risk, especially when you have Maersk and others like that putting all ships from the region or stopping all ships from passing through. Insurers are now saying that they won't insure the ships, which is why Trump has come out and said that the US will personally guarantee it. But um, under what, you know? So again, it's up to the vessel itself to want to make the journey. And I don't think that's happening.
Yeah, it's very interesting. You said that perhaps risk assets are holding up because people aren't pricing in just how long this could take, and perhaps they're over pricing in what Trump just said about being able to assist. What happens, Tom, if this war extends? Are there alternative routes that these ships could be taking, or is it just too much of a chokehold?
I don't. Again, I'm not an absolute expert on this stuff. I've done a ton of reading on it, and over several years, because this has been a problem that has sort of arisen a few times. Um, there's ways to get the oil, for instance, out. Like the Saudis can go out through the Red Sea, but they can't. They just can't get out what they can usually get out through the Strait. I think it's only 7 million barrels through the Red Sea route, rather than substantially more through the Strait of Hormuz. Um, there's the pipeline in the UAE which avoids the Strait, but again, it's limited about how much can actually get out. So I think, and you're already starting to see the Iraqis. They've cut back on production because they don't have the storage capacity or capability to store to keep producing and then storing it. So they've actually now stopped, or a lot of the firms have stopped. That's taking back barrels out of the market each day essentially, and it's then going to be the case that to turn back on will take several weeks. To then get back to full capacity will take several weeks beyond that. So straight away you're running at a 4 week lag already. So all of that is not great at this moment in time. I think markets should be taking this a little bit more seriously, but I don't think they are at this moment in time. I think they're believing Trump is pretty all in at this point. To be honest, he is going for it. The Israelis are going for it. The US are really going for it. I think even the UK Starmer has now said he would give a ship over, or and I think that's like saying something. But I think they're all in, and I think the market is then trusting that by Trump being all in, he will get something done. But they are going to need troops on the ground, and it's about who's. There's rumors that Israeli special forces went in on Saturday night, the first day of the strikes. But other than that, there's rumors that the US are backing the Kurds, but are they going to be? They're denying that they've been in already, but they are obviously going to deny that they've been in. But perhaps they're the sort of not US boots on the ground, but effectively fighting that fight for the US on the ground with US air support. It's hard to really say because it's developing at quick speed every single day. So I've not had much sleep the last 3-4 nights, especially, but just because it's just constantly moving, and I get worried that my updates will be wrong because the situation could change so quickly. But essentially, I think the market is underpriced for downside, and I don't think the market is believing that the oil price is going to stay high for too long. I think if the Iranians do a good job of closing down the strait, the price of oil will consolidate in the low 80s, mid 80s, and then move into this is Brent crude, by the way, would consolidate in the low to mid 80s and then start moving towards 95, 100.
Okay, great. Just a quick touch on Brent crude. Could you explain to, let's say, the layman what you mean by that in particular? They see oil, you mentioned Brent crude. Is that a type of oil? Is that one particular stock? What is this?
Again, I'm not an oil expert on the different ones, but you have Brent crude is just I believe the global price, and then you have WTI, which is West Texas Intermediate, I believe it is, and that's the price. Obviously, that price is up, but it's being produced in the US, so it doesn't, it shouldn't really be the case that price is going up too dramatically. I don't believe, but it's Brent crude that has gone up a lot, which is the global price of oil. And obviously, if the Strait of Hormuz is closed and 20% supply is being blocked off, then the price is going to go up.
Yeah, interesting. For me, I will just say off the bat, I believe this war is being massively misunderstood. I think it's a lot bigger than people think. And I think that the Strait will probably be closed a lot longer than people are expecting. So I do expect prices to rise. I do want to tap in and get your take on just how high things could go. But Abror, I would love to hear your top-down perspective on what's going on.
Yeah, I would like to just quickly comment on why market reacted the way it reacted and why it held up. So I think first of all, the attack was priced in like beforehand, in my opinion. And when it happened, that uncertainty was gone, and that's why like market rallied higher. On top of that, people realized that real estate is actually not a good investment, and they realized, okay, maybe crypto is better investment because it's in digital world and you can't really nuke that, with markets and stuff like that. And the only thing that was tradable over the weekends was crypto. So people realized the value of crypto, and that's why I think the whole market kind of pumped higher. Um, you like two or three things at the same time. Like the uncertainty was removed. People realized real estate isn't safe, and they thought crypto is a good alternative to have in your portfolio. I think that's why it rallied. Um, so yeah, that's my like comment on like why market held up. But I agree that like I see the weakness already in the market, and I think this market telling us that this conflict might prolong for like longer than people expect. Um, but overall, I think this incident or this attack just again like it's a good marketing for crypto in general because it worked. Banks might not work, but crypto works. If you want to send money to your like, family members in UAE, you can send it using crypto while banks don't work, and you can kind of hedge your positions using crypto as well while traditional markets are closed over the weekend. And I think it's Mr. Trump's strategy is to come up with like crazy ideas either on Friday night or like on over the weekends. So people
Yeah,
just thought, okay, this just makes the case for crypto stronger in my opinion. But in the short term, of course, like um, crypto is reflexive and it reflects the sentiment. So if the war prolongs and we have like inflation risks ahead of us and potentially even like rate hikes, I don't know, might happen, the short-term direction probably is like lower, especially with like current weakness in the market.
yeah. No, I agree with you. I think that makes a lot of sense. I believe that this is simply narrative versus macro in a sense. I think there was a lot of great sentiment over the weekend because you mentioned crypto's use case came to the table. There was a period in which people kind of forgot about the use case of crypto and everyone's attention is on AI and how useful it is and how practical it is. And people lost sight of the effectiveness of having the ability to send millions of dollars across the world in a matter of seconds with no one getting in the way. Or the properties Bitcoin actually does possess, quantum threat aside, the properties of Bitcoin itself that make it a good, you know, hedge asset. I think people forgotten. I think these things came to the surface. And I think crypto was already really bottomed out, not completely, but already really down. And well, everything else was up, that it didn't have too much further to go in a sense. And people looked and said, Bitcoin's a safe haven asset. We see the use case. You can trade crypto over the weekends. And it does seem Trump always comes around on the weekends to throw a wrench in our plans. But as I read Tom's update today, it simply came across as, look, you can't swim up a waterfall for very long. And it just seems that this is a relief rally, based off the narrative. Obviously, you saw a lot of spot buying. The ETF flows positive. You saw a lot of shorts get liquidated. But it's like you had your push now. Maybe Tom can share how much further we go. But if macro doesn't change, and I don't see how it does, and Tom, we can talk about how the economy can get back on track after. I just don't see how this rally sustains. So, Tom, what do you think? How far do we go? And are we set to pull back sooner rather than later?
Um, I think it can continue the rally, but it I'm surprised at the weakness today. I would like to have held the sort of daily open at sort of 72 area. Um, I think Bitcoin was just coming off oversold levels, and it was even going to have that one more punch lower back into 60K and retest that bottom. I still don't think that the 60K level is the ultimate bottom. I think this goes into the 50s. I don't think it's anytime soon, but I think in several weeks to months it will be it'll be back in the 50s. I think 2022 is a good, just for the chart guys, 2022 is quite a good prior example. You had the big move down into June 2022. It was the RSI and oversold levels were at their most extreme, and the most extreme oversold levels didn't reach that level again, but price did go to new lows like several times. It wasn't just FTX that drove it lower. So I think we can see something like that, which is the recent one. What was it? The date again? 5th of February, where price plunged into 60k. That really put the metrics into oversold levels. I don't think we'll see it as oversold in terms of the indicators as oversold as that again, but I do think we'll get new price lows. All bear markets have fallen below the production cost, which is at 59k, and they spent, so the current production cost is 59k, not 2022 production cost was obviously lower, but generally that's the indicator price. And they've all spent several months below the production cost and have always tested the realized price, which is 54. So that's a 10% move below. So I think that's very doable. The extent of this rally, it was driven by spot buying, but yesterday it was squeezed at the end by shorts, which is what I covered. So the move from 72k to 74k was like mostly the shorts closing out, taking price higher, and you then for this to show that it can go to 80, you then want to look at it today and say like come on, step in, spot bidders come in here with the view. There should be this like, you should have this clear couple of weeks ahead of you where you say, okay, there's nothing macro wise can get in the way. We're past bad situations, so that then, okay, there is this bit of clarity, at least for the next several weeks. The price can then get into 80k. Nothing else is going to get in the way of that. Spot bidders would have come in today and taken price higher, but they're not seemingly doing that. So I think it's possible price could go higher, but I don't like the weakness today. I wouldn't be a buyer of it, and I'd rather just wait until I'm more confident on like an ultimate low.
Yeah, I think we might view this breakout as like deviation, like a fake out from the range. I can see a scenario where like it might happen, so the whole thing was just a fake out and we back into the range and we just continue like between like, I don't know, like what was it, like 78, 68, 69 as a higher bound and like 60k like lows of the range. So we might just range and the whole thing was just a fake out.
Yeah, no, you'd be right.
Sorry. I think that's similar to December and early January. Price was between like 84 was like prices kept staying between 86 and 90, and then it would dip into 84 and then bounce again. And then the higher end was like 94, and then we got that breakout towards the end, which took us to 96, 97. And I think I was saying at the time, like that might be all you get really, because the 100 is a psychological level, etc. But there was short-term holder cost basis at the time, which was like 102. So there was loads of cost bases again at the low 100s, but which again, there's cost bases now in their high 70s to low 80s. So if we can only get 74, again, it's a bit crap. But price my point is, back in December, price did deviate out of that 94 and go into 97. But as soon as it goes to 97 and rejects, people then look at that and go, you would have thought we could have got a lot more than just a breakout from 94 to 97. So when price rolls over, that sort of ends the range, and price doesn't just come back down and retest the bottom of the range, but it actually then goes below again and creates new lows. And that's what we saw happen in December and then January. And maybe we see the same. Maybe this does go to 78, something like that, in March, and then roll over. People get disappointed. They're frustrated with the fact that, like, is this all it's done? We're now back in the 60s. And then you just see people sort of throwing in the towel that drained you into the 50s. But that's the buying area, I think.
Yeah, that makes sense. We've spoken about this for a while. You mentioned some of those cost basis levels too. It's just, we're in a very different spot, right? We've been talking about macro for a while, but we are in uncharted waters, at least since crypto's inception. From a geopolitical point of view, we've never seen anything like this for crypto, where all of these key states are involved. And I think you just have to navigate very, 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 very carefully. And I would say, what do you both think? If someone's in the market right now, how risk on should they be? Should they be deploying? Do they want to be 50% cash? what would you not recommend for people? It's not financial advice, but what would you do?
Yeah, I would trim all altcoins at the moment. Like I wouldn't hold like anything like from the alt sector. But like if you're a long-term believer in Bitcoin, I would say just hold like what do you think like um for example, if your like target is like one BTC and you intend to hold it for the long term, just hold that and rest should be cash. If it's like 5 Bitcoins, just hold 5 Bitcoins. I think in 3 to 5 years, anything below 70 grand is like a very cheap BTC, to be honest. um, but in the short term, again, like cut anything that is not necessary, cut weakness, allocate to strength. And the only strength I saw in the market was like hype. And even that, like I cut it because like market overall is showing weakness. So just if you have like the only thing that makes sense to hold probably is BTC, but predominantly should be in cash, in my opinion. And the reason why to hold BTC, even with price going lower, is again the argument that, you know, we've seen the use case of BTC and crypto, with this attack. You're not safe in like real estate, you're not safe in gold or silver. You can't send, like, you might say, okay, price is still holding up, but you can't send $1 million of gold, like, somewhere if you want to flee the country or like if you want to do something. So again, it just showed that BTC has a use case in this kind of environments, and I would still hold BTC regardless of the price. So this is the mindset I would adopt for that, for holding BTC. But if you're trading and if you're trying to make money, it makes sense to be in cash.
Yeah, Tom, what about yourself? Because you are a trader, you're very active in the market. I assume from everything you've shared, I don't know if you'd put a short in, but it seems like you'd be de-risking now to buy back at in the high 50s or soon anyway.
So I was looking to go long like 2 days ago, and I saw the Nasdaq rolling up, and I should have got in really. Price was 66. I ended up buying it at like 68 yesterday, um, and then I saw price at 73, 74. Yes, I sold today. I think it was I think I sold today close to 72. But it's and again, I'm trading stuff though, so this is not like long term bags or anything like that. So I just really want to be clear about that. Um, but that was a trade I just put on yesterday for today. I'm quite pleased I'm out, but it depends. If this holds now and then can then recover sort of 70, late 71s, mid 72s, and it can hold and then sort of reset some of the indicators, I would then look for a move from 71, 72 to 75, 76. So it would all depend. But I'm mostly in agreement. But, I wouldn't want to be in altcoins. I'm not in any shorts or anything. I think I'm in a couple of like altcoin shorts that are still like, I just believe they'll drain and bleed lower. So I just sort of leave them and put on small enough size where I don't have to like think about them too much. Um, but again, I think I've got to be careful even with those, because I think Bitcoin put in a low at 60K, and then I think it goes and does a new low in 1 to 3 months time, maybe probably not as long as 3 months, but what, just giving myself that range. I don't necessarily feel, with what we've seen previously, is that when Bitcoin has put in that low and then it's gone and been range bound and put in a new low, but on a higher level of being oversold and not as oversold as before, alts have tended not to put in that new price low. So it might be the case that some of the alt, again, I think for majors, like Sol, for instance, I don't think that low is in, but I think then for some of the, maybe like a lot of the memes and a lot of the like altcoins that aren't majors, maybe those lows are in. Like I look at things like that plasma, for instance, just because everyone was talking about that on the timeline. Again, I don't really know too much about it, but it's just one of those ones that was shielded on the timeline. I look at it to see like what would a holder be doing of that now. That low was like 7 cents. It's now 11 cents, 11.5 cents. So that might be low might be in. But again, that is definitely not me saying to go and buy a plasma,
Yeah,
by the way, because it's just me looking at a chart. But I think that's my general feeling for it. I think the Bitcoin low is not in. I think the majors lows aren't in. Maybe for hype, that's in, but that was a different cycle to ETH and Sol this last 2 years. Um, But I think altcoins, some of their lows might be in. So in terms of those shorts, I don't know if I want to still be in some of those shorts. I can continue to let them bleed a bit
Yeah.
more if I think Bitcoin heads to 60, but I wouldn't be holding those for new lows.
Yeah. Okay, cool. That sounds good. Let's zoom back out and focus on the big picture again. So if we touch on oil right now, I think it hit $85. Tom, what could send it to 100 and what could put it back to 70? Like, what are we keeping an eye on right now? I know you might say, hey, it just depends on if they can get ships through the strait. And
Yeah.
if we start to see oil creep towards 19, 95, 100, can we kind of predict where Bitcoin will be headed at that point? Or vice versa? If we start to pull back, let's say ships are going through successfully, will that be a bullish thing for Bitcoin? Will Bitcoin start moving? Or like, what are we seeing here? The relationship between the two.
I think, should you see Brent crude go to 95, 100, I think that would be the sign that the market is pricing this to be a longer, more sustained war rather than something that's done in 4 weeks. So if that was the case, I would expect all risk assets to sell off and to sell off relatively meaningfully. I don't think Bitcoin would be immune to that. I think it would just trade the same as the tech stocks, for instance, which would sell off. Um, I think yields have moved up a lot. Like bond yields have moved up a lot, but that's pricing in higher inflation and higher issuance, obviously, to fund the war. So it prices that in. Would it be bullish for gold? It probably. Um, I think I see gold as being something that's like maybe range bound, similar to what happened in mid 2025, where it went from 3,200 to 3,440, and it just stayed in that range for 6 months. I think gold will do the same. So I think gold would hold up better than other things, so it would outperform. But I don't necessarily think it's going to go to 6,000 in the next three months, or even 5,500 in the next 3 months. I just think it's range bound. I think in terms of if oil goes to 95, 100, like Brent crude goes to 95, 100, where are you safe? Probably not that many places. Maybe like the dollar. Like that's probably about it. Um, I would say that's it, and that would be due to the strait being closed, the market pricing in the war lasting longer. If oil comes down to 70, so the opposite scenario, that would be again basically the opposite scenario of all of that, which is the strait being open, the war being over in a matter of weeks, the Iranian regime being replaced, or at least um, I don't know about the regime. If it was like, I think at the moment Trump just doesn't want a hardliner in, but if it's the case that the regime could put someone in that's a bit more, moderate or whatever, then I think that could help the situation. But I think $70 on Brent crude would be positive for risk assets.
Yeah, it's interesting. I don't think getting a regime change is as simple as it sounds. Abror, me and you were talking about this and how this is not like any other country in the sense of how this is not their prime minister or their president. This is their supreme leader, right? This is a
Almost a
religious
god.
war. Yeah,
Yeah.
he was almost a god. So this is not the same. And I think maybe a lot of people aren't as clued up on the war or the actual geopolitical situation are the reason that we're not seeing um, the market pricing in this being a sustained issue. I think maybe if someone's able to look at this from a political point of view and have a better understanding of the actual conflict that's happening, they will have a better idea of just how long this thing could last. Abror, dive into that a little bit because we did
Yeah,
discuss
yeah.
this
I
yesterday.
wanted to make a quick comment on the regime change. So polar market is pricing like roughly like 58%, or like let's say roughly 60% probability that the next leader would be this guy's son. Um, and I googled who that guy is, and he is a theologist. So he studies religion and logic and stuff like that. So I guess if he's the next leader, the regime won't change and it's going to be the same thing.
They can't change the regime like that. This is, I think, with the US, they look at this like, let's cut the head off the snake, and that's game. Look at Venezuela. You kidnap Maduro, and in theory, like the rest of the regime bottle it, and they basically get along with whatever you want them to do. But this is not. This is not a snake. This is a hydra, and no matter who they get rid of, let's say his son comes into power, and they get rid of him, someone else will come. So I don't think it's a normal regime change. And me and Tom were talking about this a few days ago. So when you're actually attacking a country like Iran and you're going after these major cities like Tehran, the people who are likely to fight back against the regime, those who are more well educated, those who are more liberal, etc., they're the guys who are getting blown up. Whereas it's the
Yeah.
people up in the mountains and the villages who agree with the current regime who are safe and free. So I just don't see how regime change is practical. Yeah, so I don't know. I'd take those odds abroad on a poly
Yeah.
market. I'm
And
not
I
betting
also
them, but yeah.
Yeah, and I also heard that the supreme leader refused to leave his like house, and he just accepted that he's gonna be like murdered because he had a cancer and he's like 80 years
Yeah.
old. So, you know, so it's not really a win. And I've seen the tweets. All the politicians saw this as a win, the death of this supreme leader as a win. But he was dying anyway, apparently.
Yeah.
So I'm not
Yeah.
sure whether that was a win or not.
Yeah, well, it's one of those things, right? It's the sect of Muslim that these guys are, they're Shiites, which basically mean they believe in martyrdom, which basically means they don't mind dying. And so when you have an enemy like that, what can you really do? Tom, we were also discussing what's happening with you mentioned water and in the Middle East, in the UAE, the Gulf countries. Can you dive into that threat a little bit more? Because everyone's focused on the oil, but people aren't really looking into the water situation.
So I think they're different. So I think markets are focused. So I have like two jobs. So the first one is like my job on the
If I could
markets
interject
trading.
quickly too, you are in the UAE, you are seeing missiles go
Yeah,
overhead, so
jobs
you're
allocation.
there. So you're
Yeah.
literally in it.
So if I was in the UK, I'd be looking at this from the oil point of view to be like, how's this going to affect markets? Because I'm not too worried about a drone coming down and hitting me. But now that I'm here, I'm looking at it from the market's perspective of closing the Strait of Hormuz. What's that going to do for oil? How risk assets could trading against that? Blah blah blah. I've now got the second part, which is like I'm not in the conflict. Don't want to sit here and make out as if I'm in the conflict because I'm not really. But it's I sort of am. Like I was eating dinner with balcony door open and stuff like this, and you can't see the missiles because they're so quick, but you can see when they're intercepted and there's like the explosion in the sky or whatever, and the bang's pretty loud. And when I think it's one of like the ballistic missiles, when they come over, they're loud, and they sort of like um I wouldn't say they shake the building, but you feel like a little bit of a vibration. And as it's going over, you're just a bit like, oh god, like if
Oh,
that was to come
jeez.
down, if
Mm.
that was to come down, I'm finished, sort of thing. Like, that's how you think. But um, again, I wasn't too worried about it at the start because you think, okay, what's the chances of one of these missiles actually like hitting me? It's very 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 slim. I mean, I'll be hit by one now. It's they're very very slim chances. But when the Iranians started targeting, I think it's called is it desalination plants, yes, in Jebel Ali, which is so in the UAE, they have to turn seawater into usable clean drinking water, um, or just usable clean water. I can't remember which way it is, but essentially, if the Iranians were to strike those desalination plants and cause a problem with water, and they're going for these like core sort of infrastructure things. So, and this is one of them. These desalination plants, if they take some of those out and they cause disruption to the water in the country, city, whatever, um, I think then that would generate like real panic in the area, in the region. Because I see here like people are still on the beach and stuff, and they're still kicking about. They're not too worried. But when I speak to people that aren't really in markets, aren't really in like a bit of a rude way, aren't that bright, they're going, oh, but the defense is pretty good, like don't worry about the missile. And I'm thinking, okay, but then when you speak to some of the bright people and they're saying about this desalination stuff, and the Iranians have targeted that, I think you want to take the precaution of leaving or being out, because if if it's the case that these are taken out, then think of the panic that would cause. This is a desert as well, so like think of the panic that would cause. It's not like in the UK it rain in 24/7, so you can like you're cool, but here that would cause real panic. So I think that should be the Iranians' like strategy. Like, what would most, not that they're gunning for me, but what would most hurt me as a civilian or whatever? It'd be taking out that core infrastructure. Maybe civilian sites is a bit mental, but taking out that core infrastructure and targeting the Strait of Hormuz. Again, it doesn't seem to be the case that you need much weaponry in terms of the amount of
Yeah.
drones or whatever. So it's quite an effective way for them. And I read something, again, I can't remember if it was today or yesterday, but it's all sort of blurring in. But they have been making 10,000 of these drones per month, apparently. So like how long have they been doing that for? And I think they've only fired 2,000 of these things so far. So, and like these things cost twenty to $50,000. And like a friend I was speaking to today was like, oh, but the Iranian missiles and drones, they're crap. They don't cost, jack shit, basically. They don't cost anything. And I sort of said, mate, you're thinking about this wrong. Like, the Americans, it's costing them $2 million, $3 million to take out a 20 to 50 grand drone. That maths over a 6 month war, should the Iranians be able to long it out, that's not that great. I think the first day of war cost 779 million for the US, and it cost 630 million just to move the assets into place to take part. I suppose that's the wrong phrase, but to take part. So again, sorry, because I've got a real long way round of answering this, but they're targeting other key parts and I think they're doing it the right way.
Yeah, no, it's pretty crazy. It's definitely an infrastructure play. The US, look, they have more firepower, but you
Yep.
don't need the biggest weapon to cause. You can cause the most damage, but as we said earlier, it doesn't take much to sink a ship. It doesn't take much to damage a desalination plant, and it doesn't take much to terrify people, which ultimately that's what's happening over in the UAE. Could you educate us a little bit more about the relationship between these Gulf countries and the US? Because when it first kicked off, obviously we have team members in the UAE, and I was a bit confused as to why on earth are Iran going after the UAE and some of these other Gulf countries? Aren't they also Muslim territories? Now, there's a religious element to it also, but the UAE and some of these countries, their relationship with the US pretty much is them selling the oil to the US
Yeah.
and the rest of the world, but taking in the dollar. So by Iran attacking the UAE, etc., the Gulf countries' infrastructure, they cause damage to the US by proxy because of the trade with oil, correct? So tell everyone a little bit about the petrodollar, etc.
Yeah, so that's true as well. And also, I think maybe the biggest part is also the religious part. Is that I think they see the Saudis almost as like Muslim defectors, almost a little bit, which is they're Muslims, but they're choosing to side with the US. So they're like, what, like you cannot do that. So I think that's a big part to play in it as well. In the UAE, here there's a lot of US um, consulates, embassies. Like the US consulate in Dubai was bombed. There's a lot of US military bases here, so I think it's just a natural target. I know the UAE were also arming. Again, I'm not that clued up on this part, but the UAE were arming, I believe, proxies. I believe it was in Yemen that the Iranians were then arming other proxies in Yemen as well. So there was like a sort of proxy war going on in Yemen that the UAE were funding one side of, and the Iranians were funding. And I believe it's Yemen. Yeah, don't quote me on that. But um, so there is this like tension still between it. But I think I don't know what the stats are now, but I think it was yesterday or the day before. It was 1,500 missiles, drones, etc. that had been fired by Iran, and 1,000 of them, 2/3 of them, had been targeted at the UAE rather than Saudi, the US. But obviously, it's the US bases within the UAE. So yeah, I'm not going to blabber on that. That's what I'd say on that point.
Yeah, no, it's interesting. Bro, what are your 2 cents? In regards to the religious side, so there's two sects of Muslim, right? The Sunnis and the Shiites. And basically, yeah, they view them as detractors. They're saying, you're not defending Palestine. You're you're bringing forth the end of days, etc. And I think I saw a video where in Iran there was like a not a protest, but like a celebration. They were burning pictures of a few people, and it was Trump, it was Netanyahu, and MBS. So definitely they hate Saudi a lot, and I believe Saudi Arabia was also prompting the US to initiate strikes against Iran too. So definitely a two-sided fight. But yeah, bro, any comments there?
Well, yeah, they are, I think, religiously and even culturally they're different. I've been in Dubai and I expected Dubai to be a very Muslim country, but last time I went, I saw like people going to a nightclub and stuff like that. So I
You were
think,
there. I saw
yeah,
you.
I was dancing in a circle, right? No, no, like I mean, they are culturally very different, and I can see why they wouldn't identify them as like fellow Muslims and just attack them. And they would probably, yeah, I agree with Tom. They would probably think of them as some like Muslim traitors or someone who like lost their way, stuff like that. So, but like, I'm just curious where the like whether Russia or China will kind of somehow intervene or like if it escalates. And as you said, it's like 20% of like global, oil goes through that,
Yeah.
you know.
Yeah, it's interesting because I heard from someone that Iran and Russia have a really close relationship, like a pretty big trade deal. They're both kind of being annexed in the sense they don't get to trade with the rest of the world. I know China has a decent relationship with Iran too. I believe, Tom, you said to me yesterday that they were
Intelligence.
allowing, I believe it was Russian or Chinese ships to pass through, whereas they were kind of
Yeah.
stopping everyone else. But I also spoke to a couple of people who said, look, like Russia and China are one thing. What do you do about the likes of Pakistan and India? Like if and even like something like Japan and Korea and some of these countries, I believe it was Japan, who said if oil didn't come through, we've got like 9 months before we run out of everything. I believe it was one of these Asian markets that crashed massively when the markets opened up on Monday too. I can't remember
Korea.
which one.
Korean,
Korea
yeah.
too. I know it surged as well after, but yeah, I think Tom, I'll let you touch on China and Russia, but then go into India and Pakistan and some of these other superpowers too, because everyone talks about nuclear weapons. India and Pakistan are two of those players. And they also have a weird kind of Switzerland relationship with the US and Saudi Arabia and the Gulf, etc., and Iran. So, what do you make of these countries also?
So I don't know too much about the India Pakistan side. I know they're both nuclear countries as well. But from what I've been reading, the Chinese are helping the Iranians in terms of intelligence, not with military power or assets, machinery, like machinery, weapons, etc. But they are helping them on on the intelligence front. So I think that is, and they have to. Iran is one of their. I don't want to say key partners, but it is one of their key partners. They're a huge taker of the Iranian oil. So I think that it's not that they're not stepping in; that they sort of have stepped in to help, but not in a way that's seen as like a major ally or confrontational towards the US. I think Trump is supposed to visit the Chinese in, I believe it's in late March. So it's like this is a bit, yes, it's a bit mental, but um, I think the main thing is Russia is its own beast. I think they're heavily sanctioned. The Iranians are heavily sanctioned. They have their own sort of trade between each other. But I think the main one is the Chinese getting involved. But they are choosing not to get involved. They are helping from an intelligence point of view, but not from a military might or power point of view. I think that is pretty key at the minute as well. It would be a major escalation if they got involved, and that's your World War III situation. As mental as that sounds.
I have a conspiracy theory that
I was waiting for this part of the stream. I feel like
Yeah.
we've covered macro. In short, guys, relief rally, things are going to pull back. Tom saying between 50 and 59, narrative versus macro. Macro always wins. We're bullish on memes and on alts like hype, etc. But right now, pullback probably going to come soon. And yeah, onto the good stuff, bro. Rein in the conspiracy theories. Let's get to it.
yeah. Yeah, so I think before US went into Venezuela, the Trump, President Trump had a phone call, I believe, with President Putin of Russia. And I think they kind of agreed internally that Trump will carry on with whatever he thought like about doing to Venezuela and Iran. In exchange, he will take Ukraine, like the part he will retain the parts of Ukraine and will accept the peace guarantees. Will force Zelensky to accept the peace guarantees offered by, demanded by Russia. Ukraine not being part of NATO and stuff like that. And after the attack on Iran, I believe like Putin went ahead and said, okay, he is ready to accept the proposal by the US in terms of like security guarantees, and that's why he didn't interfere like in neither of cases, because as far as I know, there were Russian spies and Chinese spies along with US spies in Venezuela. So I think they might have seen the attack coming, but because they had these talks between each other, Russia said, okay, go ahead, do whatever you want, and I will do whatever I want in Ukraine. I would get what I want in Ukraine. So that's why they're kind of like not interfering with each other. So, but this is a conspiracy theory. I don't know.
Yeah, no, I hear you. It's interesting because you mentioned China as well. I think right now,
It might be that China goes ahead to Taiwan now. And
yeah,
attacks.
it could be the case. Because that's its own beast, completely on its own. But I think what you have to keep in mind is if the US puts boots on the ground, as I don't think this war ends just from the skies. If boots on the ground, you saw what happened when America went into Venezuela, and basically were like, look, we're in charge now. It's our oil, etc. And there's nothing anyone can really do. But if the US gets super stuck in with Iran and their boots on the ground, well, I think you kind of do end up pushing the likes of China to get stuck in because you just can't afford for someone to come in and take over your basic mortal enemy, in a sense. Let's be honest, they're tied to one another forever, but they're competing superpowers, China and the US. But you can't have your greatest rival come in and take over one of your biggest allies, in a sense, and not do anything. And it's one thing striking from the sky and doing it like putting these sanctions etc on, but actually getting boots on the ground, that's a whole different kettle of fish, in my opinion. So that's where things could escalate with China too. But Tom, talk to us about does Russia get all of its own oil from, to produce it itself? Where does Russia get its oil? Where does China get its oil? And where does the
So,
US get its oil? Does it get a lot in house?
US is a huge producer, yeah, but all of them are
Yeah.
huge producers. Less so China, but Russia's a massive producer. The US are huge producers. Um, yeah, yeah, that's it. The Chinese are quite reliant on, not massively, but they're quite reliant on imports, particularly from Iran.
Okay, interesting. I guess from a crypto or macro perspective, Tom, we have jobs data coming out tomorrow. Can you share some insights with us there? Is it all pointless when we're looking at this big
Yeah,
picture?
no one. That's the thing. This is what everyone watches, but no one cares now because this is what's because the threat of this other stuff, this conflict in the Middle East is so big. I'm the macro person. Everyone sits there and goes, "Oh, Tom cares too much about macro or whatever." Even though I think the whole market is priced of macro, but anyway, this is a fight for another day. Um, Most of the time the jobs data is like it's like the highlight of the month, but tomorrow I don't think anyone really cares because I think it's just the estimates are I'll put out a pulse for it obviously, but I think the estimates are what they are. We're not expecting any major upside or downside surprise, which is why it would be a surprise, but um, that is not going to change much unless the labor market literally goes negative tomorrow in terms of unemployment kicks up to 4.6, 4.7, and the jobs, it goes into negative 50 payrolls, something like this. Then but then even then it becomes a really complicated picture because you have the inflation likely going to increase because of higher oil prices, assuming this is more prolonged. um, and then you have the labour market weakness side, but you're not expecting labour market weakness, so no one really cares. Everyone's just looking at it as because that will be the status quo. The focus is on inflation rising now because obviously the Iran war is going to is inflationary, push the price up. So now it's like, okay, what's going to be the impact of that inflation and how significant is that inflation going to be? So that's where the market is focused now. And there's a inflation print next week. Again, people will be looking at that, but not greatly because they'll be looking at the next one because that's when the oil prices are much higher. So in 5 weeks time, but we'll know more about the fallout of this war by then, if it's longer lasting, or if it isn't. But yeah, that's the general. That macro stuff is sort of much more squashed now because of this conflict.
Yeah.
Have you guys read the recent tweet from the Block CEO how he's laying off 40% of the workforce because of, gains from AI productivity, AI tools and stuff like that? So, and the stock went up like 30% on the news. So many expect other companies to do the same, to follow,
Yeah,
the same thing. And that might create, this disturbance in the jobs market because,
yeah,
loss of unemployment, and
Wow.
Fed might be actually forced to cut rates because job market is
Yeah.
yeah.
Yeah, that's really interesting. Tell us about how that will work. You're right. A lot of layoffs. AI makes us so much more productive. If people start getting laid off at a crazy rate, how does the government and the Fed respond to this? And is it bullish for us? What happens? Is there some sort of stimulus like UBI? How will that play into this?
um
um
yeah, go ahead.
I'll go. um, I think that would be quite bullish, as mental as it sounds, because I think you would have inflation and they'd be cutting into inflation. So I think you then have to own the fastest horse, which is risk assets. So then you look at risk assets and go, what's the fastest horse there? Well, it probably is Bitcoin. So then I think that would be like, I think the first reaction would be a puke out, and then that you would see the stimulus off the back of it. Um, and I think then Trump's whole Main Street versus Wall Street thing goes out the window, and I think he's just like pump this and put money into the markets. Um, so yeah, I think that would actually be quite bullish. But that's like a COVID situation in terms of, you just, this is bad. Just, it's not as bad as COVID, but it's a similar situation where you just thrust money in, essentially.
I mean, that's good for us. I was talking to a friend of mine
Yeah,
who studies politics. They're American. They're a lawyer, and I asked them what it's like on the ground in the States, and they basically said to me, "Look, it's actually awful. Like when you really do go into the grocery store, it is really expensive, and there's a lot of political unease when you're talking to people. Things are very tense. Now it's New York. It's a very left-leaning
yeah,
place, whereas obviously, they're gonna hate Trump and stuff." But they said it was a terrible environment, and they're like, look, ultimately it didn't make a difference to most people when the stock market was surging.
yeah.
People are just making less money and they're not doing well, and we've spoken about this before, Tom. What's good for our bags isn't necessarily good for the real
Main
world and the
Street.
real market in a sense. And so we're here saying, oh, please cut rates and like more liquidity and pump my
Yeah,
crypto bags. But it doesn't seem to be going too well for Trump with his approval ratings and stuff too. And in a sense, maybe he's trying to appeal to the big players. Um, but I don't see how he comes out unless there's a resounding, huge victory with this Iran situation. I don't know how Trump comes out the winner in the midterms. And then everything just seems like it's going to get very hard to push across the line. And if you're a Democrat or you're on that side of the party, you're going to do everything in your power to make life terrible for the average American and the markets. Because why would you want Trump to do well going into the actual full elections? So, what is he at a big risk of losing these midterms? And then does that change the big picture? Like, we have this macro bullish outlook of like, yeah, look, eventually let this war blow over. Maybe it's a good thing. You get more stimulus, the rate cuts will come in. Uh, but what happens if he loses these midterms? It just seems more and more likely.
I think he'll get impeached, which is very bad.
That would be so bad for the markets.
I think that's what the Trump family fears, that Trump will be impeached. It could be it could be like multiple multiple things. To be honest, it could be Epstein related. It could be a few bits, but um, my view is this has got to happen. Like, if we're going to see like rates be cut and happen, it's got to come before for the midterms, because his polling is not good at the moment. It's sort of diabolical, and there is. I know New York is maybe slightly different, but there is an affordability crisis a little bit in the US. Like, I remember, I think it was last year. I was in New York. I went to that Cat's delicatessen, which is supposed to be like really well known. I was
Okay.
there with I was there with two of my mates. We got three beef pastrami, whatever they're called, sandwiches and cokes. And I remember paying for it. It was $140. I remember just being like, just paying $140 on free sandwiches, like, and you just think like, like how do like people usually afford this or whatever? But so there is that affordability crisis, and I think what housing is in a recession over there. So I think and it's been in a recession for a very long time, like several years. So I think what's happening now is people are waiting for the rates to come down so they can refinance their house, pull equity out, and spend again, and that will reinvigorate the housing market, which reinvigorates activity, which then people can look for deals, try to make profits, etc. If he can't get the interest rates down, and at the moment the 2-year, which the Fed will mark itself off the 2-year on Friday, the close on Friday was 3.375%, which is basically saying the Fed should do a 25 basis points cut and there's room to do another 12 and another half cut. It's now back to 3.60, which is basically saying you're on hold, you're spot on, don't move again. So Trump needs this movement down interest rates to which essentially would help bring yields down, but it's the yields are governing it rather than the other way around, because there is this affordability crisis. So I think it's very, very difficult for him to go and win, for the Republicans to win the midterms, to be honest. So I think the crypto legislation is looking good. I think he's now pressuring the banks to get, and Abror, you'll probably know more than me on this, but he's pressuring the banks to pass this Clarity Act or whatever it is, which should bring in bigger players, etc., etc. But yeah, that's where I see it. The macro seemed quite clear to me, and it's like this war has now got in the way, especially from the rate cutting perspective. So it's made it all more exciting, I suppose. But it's muddled the picture a lot.
Yeah, no, it's true. I would say this. I'm a very optimistic guy. I don't worry when the portfolio's red. It is what it is. There's bigger things going on in the world. And I do subscribe to your overarching theory of macro and what was meant to happen with rate cuts. I just think this thing will keep getting pushed back and back and back. The longer this war goes, the worse it is. And as you said, if he loses the midterms, I don't know about getting impeached, but I think his influence is massively going to wane. And I think there's no interest from half of the country in him doing well to close out his presidency. And I think if you're his opponents, you're going to do everything in your power to make him look bad as well, if he doesn't do a good enough job of looking bad himself, to be quite honest. But I don't know how they can allow the markets to do well. I don't know why they would cut rates. I do see, like, look at the amount of weaponry they have to produce. Like, Tom, how does it work in simple terms? When the US goes to war and they're blasting missiles through the sky and they spend $700 million on the first day, where is this money coming from? When they need to now go and make more missiles and more planes, debt, right?
The debt market, which is why yields are up. Yields are up because you own a bond. So the simple math of it is you own this bond, which is the US government needs to borrow money. So you go to them and say, sweet mate, I'll give you $100. You give me your $100 bond and you're going to pay me, you're going to pay me 3.6% over the next 2 years. Cool. So you get 7.2% over the 2-year mark, then your $100 back at the end of the 2 years. The price of that bond changes. The price of that changes. So, and it's basically, if the price goes up, yields goes down. If price goes down, yields go up. So you're now looking at this situation now where you own these bonds as a trader. Like, you're a big hedge fund, big financial firm, whatever. You own loads of these bonds. You're going to trade them based on their price. You know, a war has just kicked off. The US needs to raise more money to fund this war. Oh no, it now looks like it's going to go on for longer. Oh bloody hell, they need to now raise even more money. You own these bonds that priced at $95 or $98 out at what they were originally at 100. But you know, for the US to go and sell that new debt for the new money they've got to raise, investors are going to say, oh, I will demand more yield, especially now the inflationary pressures from it. So the price of existing bonds will just sell down, which is why then the yields are going higher. So the new investors coming in will demand that higher yield. So it's the money will come from the debt market, which is the bond market. The US will sell more bonds, issue more debt. But if you own bonds, issuance is increasing. You're not going to buy bonds. You're going to sell your bonds instead because you can get it in a week or two's time at a higher yield. So then all of a sudden, that's why yields have risen again. That's a tightening of financial conditions, bad for risk assets, but risk assets are holding in at the moment. They're not believing that this war is going to be long lasting. But the bond market is sort of saying differently. So, and the bond investors are usually slightly smarter than but they're more like they sort of encompass everything, where the stock investors are more just bang, let's go for it. But so I think that the money comes from there. Is this is a problem? Yeah.
Yeah, I think one of the things like I was thinking about here was saying whenever we park our stables to earn yield, we need to make sure that the it's higher than the treasury bonds,
Yeah.
like 2-year treasury bond. What did you say the rate is? 3.6. Okay, so like if you go to Camino, it's like
On a 2 year,
3.9, 2 year.
you
So it's
you can
not
buy different
that
bonds.
good, right? And
Yeah.
I've seen even like a yields like at 2 point, like on Aave or something like that. So you actually are underperforming bonds, which is like the safest asset on the planet, kind of. You know,
But bonds don't really make money. Like you're just sort of keeping up with inflation.
yeah, yeah,
So
yeah.
you need to buy these things called tips,
But
which is basically like
if
protecting
your
against inflation
stablecoin
as
yield
well.
is lower than the treasury bonds, that means you're in a bad position.
Yes.
Yeah,
Just
so
Okay.
wait for Bitcoin to go to the 50s. Forget the
Now,
yields. Just
Tom,
wait for Bitcoin
Tom,
in the
I've got a
50s.
better idea. Like, you're great, you're good at what you do, and I respect it. You're a macro guy, you're not a crypto guy, you don't get it. Bro, give the man the circle thesis.
oh.
Oh yeah.
Explain
Have you
to
seen,
him
have you been following the what's happening in Circle?
No.
the circle thesis, Stocktonary, our very first stock pick. Mr. Abror, just make the pitch and explain to him what went down this week.
Look, crypto will go up over years. Adoption will go up over years. That means stablecoin supply will go up over years. Okay, uh, but in the short term, like whenever there is instability or fears of rate hikes, the circle will perform well in that scenario, while the risk assets will go down. So they kind of counter hedge kind of play, where in the long term they both crypto and the circle should go up, but in the short term, if there is like some instability or fear of rate hikes, circle should do well because they earn revenue off treasury assets. So if we see rate hikes, so Circle should perform well, and BTC should go down, right? Technically, because it's a risk on asset. But in the long term, if the rates remain unchanged and everything is good and BTC goes up, Circle should go up as well because the overall adoption of stablecoins is growing at, I don't know, at like 70% a year. So it's kind of a good hedge to have in your portfolio.
Yeah.
So that's
No,
the pitch.
and we saw this week it run crazy because we also saw the Clarity Act, which gave some more clarity when it came to legislation. And what return did we see? Did it rip like 70, 80% from the
Yeah, I
lows?
think it's like 80% in the last 2, 3 weeks from the lows, and like in the last 7 days it was 50%. But because yesterday was 50, but today it's like 30 because it's like a moving average. So yeah, it performed quite well.
Yeah, are we due for a pullback though? From everything Tom's saying, and when something rips, I don't know if now seems like the right time to enter.
One thing I've noticed is that the hyperliquid traders are very good at like trading generally, hyperliquid crowd, and whenever the funding is like very positive, it generally goes up in the short term. So they are right in their direction generally. And if the funding is negative, the price goes down. So right now, like they are still betting on price keep going up, but I see it being overbought on the daily on 3 day time frame. So I think there might be some profit taking here. And I've also read that some of the move was a short squeeze from hedge funds. So probably it's due for some pullback in the short term.
Yeah, okay. No, well, Circle, fascinating asset. What about hype, Abror? I know Tom can't trade it to save his life. I know you're very bullish on hype. I am too. I know Tom is as well long term. But this was crazy. Record levels of trading, right?
Yeah,
Um,
yeah.
over the
I
weekend.
think
And I think it's going to be another crazy weekend. As you said earlier on, Trump always has something fun in store for us as the weekend approaches. So, what do you think? Record weekend again for hype, or no, just something big? And come on, the
so. There are
narrative's
two
big on it,
things.
isn't it? Yeah,
Yeah, I'm currently short-term bearish on hype because I think it made another lower high. Low high, yeah, another lower high. So I kind of de-risked my high portfolio. I traded it quite well over the last like 4 or 5 days. So and I think SEC chair, either SEC chair or CFTC chair, they approved US, entities to trade to offer perp markets. So it kind of not really good. It's kind of on the one hand is good for hype because now it becomes like a hype can enter US market, and previously they couldn't offer their services in the US market. But at the same time there will be competition because Robinhood and all these other companies can launch their perp market as well.
mm,
So there will be increased competition there. So it's kind of a double-edged sword here, which is not good. And hyper showing weakness. So I think it market is telling you that it's kind of bearish. So I'm short-term bearish on hype here. But again, still the value proposition of hype is like non-KYC 24/7 trading, and you can't do that in traditional markets, even if they allow perp trading. You still need to trade over weekends, right? And no one like you
absolutely.
want to be able to hedge, especially with Trump doing crazy stuff on Friday evening after market closes.
Yeah,
So thesis is strong still, like it's one of the strongest assets in the market. But in the short term, let's see. I think it might go like to 25, and maybe bottom would be 23 to 21. If it doesn't hold, it will might go like to like 18. But that would be very deep value there, to be honest.
yeah, no, it makes sense. I think we're seeing some incredible developments fundamentally in crypto. Obviously, macro backdrop awful, so price reflects that, and now even more so. I guess news is political. News is macro, but it's not, it's not the fundamentals of it. It's not interest rates, it's not inflation, etc. But things from a crypto perspective look great. I think, um, I just think the prices don't reflect the value right now, and I think, when the market risks on, I think a lot of things are going to show themselves to be ridiculously undervalued. But
Yeah.
yeah,
I would be happy to buy a hype like if it goes down. Like I wouldn't be feeling bad if it goes down, to be honest. So just being patient and see. It just showing strong product market fit.
yeah,
That's it.
absolutely. Question for you guys. So none of us are oracles, but 6 months from now, what's the score? Like, I'm going to set up a Polymarket account and I'm going to go big based off this chat. So, what does the world and the markets and crypto look like 6 months from now? We'll revert back to this. Genuinely, like, I believe this war will still be going on. I don't think it's going to be as bad as the doomsayers, trying to get across, but I think it'll still be going on. I think oil will be higher in 6 months than it is today. I think Tom's going to be in England still. And I think Bitcoin will touch Tom's levels, but then bounce a little bit. What do you guys think?
You go
I
first,
can
Abror.
say I'll be still in England for sure. Yeah. Yeah, when it comes to market, okay. Um I am kind of optimistic always when it comes to geopolitics. I still think we live in the most peaceful time ever. If you look at it historically, I think I'm optimistic it will resolve or will end up like being like, like Russia, Ukraine. So they're technically at war, but it's not that aggressive in a sense. So I think it might end up being the same thing where the war just continues, but you don't see much of a action happening. Um, Probably BTC goes lower. I'm thinking, I'm not sure whether it will go to like low 50s, but maybe like high 50s probably might be the bottom. So it will be maybe like a new low, bullish divergence on the weekly, and then you just keep going higher. Maybe something like that. I think altcoins will probably make new lows. I think Solana might go into like $50. I'm not sure on the hype, but I'm looking for some other assets that I'm like, maybe I might allocate a little bit. They probably will make new lows. Um, I think people will keep gambling, whether there is a war or not war. So like, Hyperliquid and Pump Fund will continue printing, in my opinion. So yeah, this is my take. And I think there is no need to rush. And when
Yeah.
you see bottom forming, you will have enough time to allocate. So there is no reason to kind of rush into this kind of thing. So yeah, this is my case. So just being patient, observe the market, and when the good risk reward present itself, I'll just go in and we'll just make money.
Yeah, Tom, yourself?
Can I ask a quick question first?
Yeah.
The next say the next cycle or the next like bull run that's 12 months, 18 months long, is hype your bet over Sol, ETH, etc.? Like your major, that's the one you pump
Look,
in.
Depends. For example,
Sorry.
okay.
Because last cycle it was Sol. Like Sol was the obvious one. It was the one that was getting the activity on chain, etc. It was the one that you have your Bitcoin and then you go for it in Sol. Is I know you still want to have a bit of Sol as well, but like, would you go more aggressive hype than Sol? I'm almost thinking for myself here.
I think I would, but for example, right now I feel like hype is slightly overvalued relative to like Sol and ETH.
Yeah, say
But
it gets to that level, low 20s. Sorry, Adam. Say Sol gets to 55 and hype gets to 21, and those are your bottoming levels. What do you reckon? What are you doing?
okay.
Just a rough way of
The thing is,
waiting.
the thing is, the reason why I'm looking at like $50 for Sol, at $50, Sol becomes very attractive, to be honest, because relative to the revenue and all their metrics, it would be the price I would be like willing to like bet
Go
on
for it.
Sol. Yeah. But hype at $21, it becomes like, because mind share and all this narrative and all this like momentum is there, it was very attractive to bid like at $21. But if they both go into like $50 and $21, um, that's a very difficult question. I think I would go like,
Is $21 the $50 for hype? Like, is 21 hype and 50? Sorry, is 21 hype and 50 Sol the same? Like in terms of deep value for both, or is hype lower than 21?
I think $50 and like $18 to $19 would be like equal. Like it feels like it would be equal, because I think hype didn't go down as much because there was this momentum and like mind share. And Sol just lost all the momentum and mind share, but it doesn't make it kind of worse asset.
Worse.
So I would just buy both, in my opinion, but I still think, because prices are mostly driven by narrative, I would just go with hype, and it's kind of newer asset, like relatively compared to like Sol and ETH. And there is a narrative that Sol, and if you look at the charts actually, so the charts tell you that Sol is like following ETH this cycle essentially. So it's probably might be a lagger, even though like, because the this cycle we've seen that even though fundamentals are very strong compared to like everyone said Sol is inflationary, meme coin casino, blah blah blah, not legitimate. Institutions are buying and building on Ethereum, but still it lagged. So I can see I can see the same scenario happening to Sol, where you see like fundamentals. I might argue from the fundamental perspective, right? $50 is great, but again, like narrative wise, hype might just take all the attention, and the same thing might happen to Sol. People would be like, oh, fundamentals are better than hype, blah 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 blah. But we've seen the same thing with ETH, this cycle. So this is what I'm like thinking. So probably I will be overweight. hype. But again, $50 looks very attractive for Seoul. Like, if it goes to like 150, it just 3x kind of thing,
Yeah, yeah, easy money almost.
Yeah, yeah, yeah.
So sorry. So my 6 months would be. I think Bitcoin is bottomed. I think so. With it in 6 months' time, I think Bitcoin has already bottomed somewhere in the 50s. Um, it's making its way higher. It's probably higher. I would say it's much higher than it is now. Um, I think the war situation, even if it is still playing on, I think oil will be lower. I think even if the war situation is playing on, it'll be like the Russia-Ukraine situation now. This is even going to be done quickly and aggressively, or it's going to be sort of a war of attrition, similar to what the Ukraine-Russia war is. I'm more of the view that it's done much quicker than Russia-Ukraine. It's not a war of attrition. It's done much quicker than Russia and Ukraine, but it's not something that takes 2 weeks. I think something that takes like 2 to 4 months, somewhere of that view. But I think markets will see beyond that. In 6 months' time, I think Bitcoin will be a lot higher. I think like Sol hype, etc., will have bottomed. I think they would then be. Sol is 89 now. Comes in there maybe something like this. Maybe it takes another 2 months, 3 months to form a bottom and then begin moving higher. Maybe in 4 months' time, it's at like current levels, $100 give or take. But then in 9 to 12 months' time, it's back at 150. So I think, and again, those bear market periods are boring. Like you need to be building the positions, and you're sort of doing the hard work as you're building that position, building it with more DCAs, and it's just rather than the way I explain it to people is rather than price coming down and then going like this, you're not trying to let price come down and then go like that and then bang get that bottom point there. You're just letting price go down, form that bottom, and then come up, and you're just DCAing across that bottom basically. So I think that, and it's a bit boring, but I think that is the job, and it produces great returns. So that would be my view for 6 months. I think equities and stuff like this, I don't know if they would be higher. I think Nasdaq, S&P, I think could actually be lower, um, or having bottomed and again on their way up. But I don't think they'll be. Stock markets have like sort of gone up like this, and now they're like topping and like grinding to a halt almost, and they seem to really be rolling over. I've said this for a few weeks that they're rolling over, and they're just sort of still rolling over, but not doing much more than that. So it's hard, but it's like what now takes the Nasdaq to 28? What takes the S&P to 75, 77? It's hard to really see what it is. Anyway, I'm going to end up rambling on. That's my like six month view. I think in short, we're at the start of the bottoming processes. Prices can go lower. It's going to be a bit boring, but I think prices will bottom. You'll get your bottom buy within 6 months. You'll have bought your buys, price will be on, having finished the bottoming process and grinding back up. And I think if Bitcoin will probably be higher than 71 now, having put in a bottom and be grinding back up. I don't think it'd be much higher. Maybe it'd be like 80, something like this, but it would have been down to 56. So, and then, if you can build a position at an average price of 59, 58, straight away into 80, you're looking, what's that? 59, 30% gain, give or take, 32, something like this into 80K. And that's with still the upside of 120 to come in maybe 12 months time, something like this. I don't know, but that's what
Yeah,
it'd be.
that makes a lot of sense. I agree with both of you. I think you're pretty much saying the same thing. I think it's really interesting. I think overall, first half of the year was about getting positioned, and you don't want to rush. You've got to stay patient. Tom, you've said it a couple of times. You said maybe price pain is done, but time pain is
Yeah.
not. So, and Abror just said it there, just don't rush. Take your time getting into the market. I think this is why I've been such a big proponent, advocate of CLPs. I'm in a Solana pool. I'm in a couple. One of my pools, I think $60 to $100 is getting me 6% a month, right? I've got a $40 to $120 Solana pool. That's like 3% a month, 2.5% a month. I know high USD pools are absolutely crushing it as well. So Tom, you mentioned like Solana or Hype. I think both. Luckily, we can pick both.
Yeah.
I think just by the fact that you've got a much smaller market cap, I think there's more upside in Hype. I do think the narrative for it and its attention came maybe a couple of months ago, and it got all of its attention the same way ETH was kind of ignored for Solana during the meme coin run. I think Solana and Ethereum have been kind of, especially Solana. I think Solana has been ignored in favor of Hype from the sense of the perpdex conversation, and I think Ethereum is getting a lot of attention when it came to the stablecoin stuff. So Solana's kind of that middle child who's been ignored a little bit.
Yeah.
And eventually, as we risk on, and I do think when meme coins and these things come back and people want, if it goes to $50, guys, it's a 6x away from all-time high, right? Like 6 months ago, no one would have seen a $50 Solana. No way. So I think getting allocated to all of those big assets, Bitcoin, Ethereum, Solana, Hype, I think they all make sense. I think when it comes to upside, you literally have to go down the MCAP scale. I think attention, as we've said, Bitcoin had the quantum threat narrative pop up for a couple of months, which doesn't disappear, Tom. You said it earlier, but I think now the whole gold 2.0 narrative is there. I think Ethereum massively benefits from stablecoins benefiting. I think naturally, as the market just continues to risk on and on and on, when things do spin, Solana is the go-to chain for retail. I think Hype, like you said, the fundamentals are there, bro. It's a revenue-generating protocol, and it makes money, unlike the likes of Ethereum and Solana. But I think getting allocated to all of them makes sense. In particular, with Sol and Hype, the liquidity pools are so nice. When I'm looking at Ethereum and Bitcoin, I don't see I'm not getting exposure to Ethereum and Bitcoin via liquidity pool. But with Hype and Solana, I think they're great. I think we need to do another yield watch report, Abror. I think that's going to be key. And yeah, what about oil, Tom? TradFi guy comes to you. He's like, I hold gold, I hold some oil, I hold some bonds. What do I do? What do you say to the TradFi guy?
I would say I would still, even though I think oil can go higher, I would sell oil, sell bonds always. Stocks I'd sell. Gold you can hold, but I think over the next 12 months, Bitcoin outperforms gold. So I long Bitcoin. I wouldn't choose that as my pair, long Bitcoin, short gold. But I do think Bitcoin's done enough price pain now. And I think not at this price, not 71, but at 62 and below, then I would take that trade, long Bitcoin, short gold, and play it as a pair trade. Again, you could just long Bitcoin. Like, there's no need to do the shorting of the gold part. But yeah, that's what I would do.
Yeah, perfect. Okay. So Bitcoin, Ethereum, Solana, Hype, one meme coin in particular that everyone knows we've been talking about, Circle, and yeah, maybe a bit of gold. And yeah, I think that's the perfect portfolio, guys. Thank you very much. Is there anything you want to touch on before we head off from an on-chain perspective, from a macro perspective, from a fundamental perspective?
I think we've covered it all.
Yeah, just patience and yeah.
Awesome. Thank you, guys. Really appreciate it. Yeah, signing off. Joms, you can shut us down.
Thank you guys. See you. Bye bye.